Hello and welcome back to my channel. So in today's video we are going to learn about some basic terms of accounting. In accounting, many technical words are commonly used and it is important to know their meaning for understanding the financial information and to communicate and for many other reasons. Okay, so here we have some list of the terms of accounting. So let's understand each one by one. So first we have the proprietor. So the person who makes the investment and bears all the risks connected with the business is the proprietor. So this basically means the owner of the business. And next we have capital. So it is the money or assets that business owners invest in their company to start and operate to grow it. So for example, if you start a business and if you invest a cash or your property like furniture, machinery, land, building, all those things are considered as a capital. Next we have drawing. So it refers to cash or any cash value of goods withdrawn by the owner for personal use or any private payment made out of business fund. And next we have assets. So anything that has a monetary value and are in the possession or is the property of a business enterprises is called assets. So assets can be cash, bank balance, stock, furniture, machinery, land and building, bills receivable, money owning by the debtors are all assets. And assets may be classified into two categories. The first one is the fixed assets, and it refers to those assets which are held for continued use in the business for the purpose of producing goods or services and are not meant for resale. So for example, like land and building, plant and machinery, motor vehicle, furniture, all these things are fixed assets. And we have current assets. So it refers to those assets which are meant for resale or which the management would want to convert into cash within a year. These assets are also termed as active assets. So for example, cash in hand, stock, bills receivable, all this are under current assets. And next we have liabilities. So it refers to the amount which the firm owes to other parties. In other words, liabilities are debts. They are the amount that a business has to pay to the creditors. And under these liabilities, we have two categories. So the first one is long-term liabilities or fixed liabilities. And this refers to those liabilities which falls due for payment in relatively long periods. So for example, long-term loan, bond payables, pension liabilities. And second, we have current liabilities or short-term liabilities. So current liabilities refers to those liabilities which are to be paid in near future, normally within a year. So for example, bank overdraft, bill payable, creditors, outstanding expenses, short-term loans, all these are under current liabilities. And next we have revenue. So revenue is the total amount of money company earns from its operations over a period of time. It's also known as gross income. And next is income. So income is the revenue of a business earned from selling its goods and services. And next we have profits. So profit, it is the excess of the total revenue over total expenses of a business enterprises for an accounting period. And next we have loss. So it is the total expenses exceed the total revenues. It can also refer to some fact or activity against which firms receive no benefits from loss due to fire, theft, etc. And next we have voucher. So the documentary evidence in support of a transaction is known as voucher. So example of voucher could be cash memo, invoice, receipt, etc. And next we have expense. So expenses is the cost incurred in producing and selling the goods and services for the purpose of generating revenue. So example of expense could be cost of goods sold, rent, commission, salary, advertisement. All these things are the example of expenses. Next we have discount. So when a company or seller gives concession or allowance to their customer, it is called discount. Next we have depreciation. So depreciation is the decrease in the value of fixed assets. It is decreased due to various reasons like wear, tear, obsolescence, etc. And next we have appreciation. So appreciation is the opposite of depreciation. It is the increase in the value of assets. And next we have debtors. So debtors are the persons or other entities to whom business has sold goods and services on credit and amount has not yet received. And a person who owes money to the firm, they are called debtors. So next we have creditors. Creditors is an entity or person from which business purchase goods and services on credit. So a person or a firm to whom a company owes. Next we have goods. So goods is the items that are purchased for the purpose of resale or for inventory to be sold. And next we have purchase. So the term purchase is used only for the purpose of goods. Goods are those things for resale or producing the finished products which are meant to be sold. And under this purchase, we have two types of purchase. One is cash purchase and the other one is credit purchase. So cash purchase means when a company bought goods in cash, and credit purchase means when the company bought goods in credit. Next we have sales. So sales, this term is used for the sales of goods. And under sales we have two types of sales. The first one is cash sales and the second one is credit sales. Cash sales means when goods are sold for cash, they are cash sales. And when the goods are sold and payments are not received at the times of sales, it means it refers to as a credit sales. And next we have gain. So it is a monetary benefits or profit advantages resulting from events or transaction which are incidental to business. So example of gains are sales of fixed assets, appreciation in the value of an asset, winning a court case. All these things are the example of gain. So that's all for today. These are some of the basic terms of accounting. So I hope you learned something today and thank you so much for watching this video.